Ladies and gentlemen, the Fed has raised interest rates by a quarter of a percentage point. This is breaking news. This is just out. I'm going to be talking about what they said here in this article, and I'm also going to share with you why I believe this was the right move, although it is the lesser of two bad moves. And I'll explain what I'm talking about. Now, as a cryptocurrency investor, I'm going to share with you what this means for me today and what my plans are moving forward as well. I'll cover my moves or my ideas or my strategies a little bit later in the video. First up, the Fed hikes rates by a quarter of a percentage points, but at the same time, they indicate that increases are near an end, meaning interest rate increases are near an end. I'm not certain if that's true. I think time will tell. I think the reason they say this is to calm the market. I don't think the Fed really wanted to raise interest rates today, but I feel like their hand was forced. The Federal Reserve on Wednesday enacted a quarter percentage point interest rate increase, expressing caution about the recent banking crisis and indicating that hikes are nearing an end. Although with this ninth hike since March of 2022, the rate setting Federal Open Market Committee, FOMC, as people often say, noted that the future increases are not assured and will depend largely on incoming data. The committee will closely monitor incoming information and assess the implication for monetary policy. The FOMC's post-meeting statement said the committee anticipates that some additional look at this funny wording. Some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In other words, no matter what, we might have to make some hard decisions to keep inflation in check. Inflation is the big worry here. It's possible that we have banks that could collapse. But the worst thing that can happen is runaway inflation. Again, I'll explain that here a little bit later in the video. I got a little diagram to show you. The wording is a departure, meaning the wording of the statement from the Fed is a departure from previous statements, which indicated that ongoing increases would be appropriate to bring down inflation. Stocks rose slightly after the announcement as investors waited to hear more from the Chairman Powell in his press conference at 2:30 p.m. Okay, so here we are. There's a little chart showing the interest rates are going back up. And by and large, I believe this is the right move. And let me explain why. So I've got this diagram here just to kind of show you what's going on right now with interest rates and what's causing the banking crisis, because the banking crisis is the real issue. But the Federal Reserve has to be able to bail out these banks or to backstop these banks. And by not raising interest rates, they run the risk of not being able to backstop the banks. Let me show you what I'm talking about. Let's just pretend for a moment that this line going up is interest rates going up, right? And then these little rectangles here are essentially bonds. Now the size issue expresses that they pay more interest, right? The bigger the bond, the higher the bond, the more interest it's paying. But let's just assume when these bonds were issued, every single one of them were issued at the same price. Hypothetically, let's just say it was $1,000. This bond, when it was issued, at the date that it was issued, it was $1,000. When this one was issued, it was $1,000. When this one was issued, it was $1,000. And when this one was issued, it cost $1,000. The difference in the bonds is interest rates were lower when this bond was issued. So let's just keep it round numbers. Just for illustration purposes, let's just say this bond was paying 5% when it was issued. It cost $1,000. But a few months later, the Fed raised interest rates. They issued this bond at $1,000 as well, but now it's paying 6% interest instead of 5%. A few months later, they issued this bond. It's $1,000, but because they raised interest rates, now it's paying 7% interest. And I'm just using round fictional numbers to make a point here. And of course, at some point later in the future, now interest rates are 8%, which they're not. I'm just using that as an example. And this bond costs $1,000. What's happened is banks have purchased a lot of these bonds right here because that's what banks do. That's one of the things that they invest their deposits in is U.S. Treasury bonds. Historically, Treasury bonds are stable, and the federal government always pays back their Treasury bonds. But they only pay it back at the interest rate in which they were issued. And that's good for banks unless they have to raise money because of deposits. There's some sort of they're low on deposits. So if enough people aren't putting their money in banks and too many people want to take their money out, quite honestly, similar to a Ponzi scam, the banks can run out of money. So to prevent them from running out of money, they can sell assets, or in this case, treasury bonds, to pull money back in. The problem is if this bond initially costs, say, $1,000, when this new bond got issued at a higher interest rate, this bond costs $1,000. If you were to sell this lower interest rate, it's going to be less money. Maybe it's $900. This one's $1,000, but if you got to sell these, it's $900. And then if this bond gets issued over here and now it's paying out 7% interest, they issue it for $1,000. This bond back here, if you still own some of these and you have to sell it, you're only going to be able to get, say, $900 for this one. And if you had to sell this one, you're only going to get $800. There's a bit of a, if you think about it this way, there's a price gap here, right? I probably could have done that in a different color. But because of this price gap, what ends up happening is these bonds there's not enough money here. There's not enough money here to get the full amount that the bank invested if they are forced to sell those bonds. So what happens here? Well, this is when essentially the federal government comes in and they backstop. They say, hey, we'll bring money in. We'll cover depositors. We'll cover this short fill here, this shortcoming for depositors. The only way, and that's what the government recently did for Silvergate Bank. They said, we'll make depositors whole. Or in this case, even part of it could be FDIC money. But either way, the federal government has to use money that they don't really have available. That's important to understand. FDIC is only about 1.6% funded. 1.6% funded. Think about that. So the federal government has to be able to bring money in or print money, however you want to say it. They've got to make money, literally, to be able to come in here and backstop these banks. This will only work if people have faith in the US dollar. If inflation continues to increase, if we start going to from 6 to 7% inflation to 8%, 9%, 10%, 12%, there comes a point in time where people are worried about a collapse because they know that when the government comes in here to save the banks, they're coming in with dollars that are quickly devaluing over time. And at some point, it becomes less effective for the government to bail out banks. The worst thing that can happen is for the US dollar to experience runaway inflation, and then all of a sudden people don't care, that the government's coming in. Inflation is too high, and they're afraid that the dollars aren't going to be worth it anymore. And this hole that needs to get plugged, this hole that needs to get plugged ends up getting bigger and bigger. More and more money needs to come in, which would cause inflation to go up faster and faster and faster. So one of the things the federal government has to do, if they have to balance being able to bail out banks, but at the same time keep inflation from getting out of hand. And we're somewhere, I forget where we're at, somewhere between 6 to 8% inflation right now. So far this year, you can go down in the comments, let me know what the exact number is. So I felt like it was important that the Fed come in and raise interest rates. I thought that was going to be important. I felt they had no choice. One of the things they look at very carefully is the unemployment number. As long as unemployment is under 4%, the Fed typically believes that they can raise interest rates okay and still sort of protect the economy, although rarely do they have to worry about causing greater banking collapses, because this number here, what this indicates here is when there's a gap from what banks paid for the bonds they're holding, the treasury bonds, when there's a gap in the value of those bonds versus what bonds are being issued in today, it basically means they have paper losses on their books. Now, they don't have to realize these losses unless they're forced to sell. So they're worried about undermining the banking system. And the way the government protects the banking system is they come in here and they bail it out right here with extra funds. But they can only bail it out with extra funds if the dollar is respected, if people believe the value is going to stay strong, and they believe the government's going to prevent runaway inflation from taking place. So that's why I believe the Fed sort of had to raise interest rates. Unemployment's at about 3.6%. But interest is high. So I think they were forced to do at least a small rate hike. And I'm going to go ahead and predict that we're going to see another interest rate hike. Now, a lot of people don't think it's going to happen. I'm going to tell you now. You can subscribe to the channel. We'll watch together. Let me know what your thoughts are in the comments. Do you think they're still raising interest rates the next time around? Now, what am I doing at this point? So when I invest, I have multiple investment strategies, specifically in the cryptocurrency space. By the way, nothing in this video is considered financial advice. This is just my strategies and just my outlook. So I have about 3 or 4 major strategies that's focusing on producing cash flow from the cryptocurrency market. So I'm looking to earn passive income from the cryptocurrency market. And the reason is because it helps offset price dips. And anytime that you have cash flow coming out of the market, meaning if you have $1,000 and that $1,000 is earning you 10, 20%, which typically I'm looking for 20, 30, 40, 50% in the cryptocurrency market. So if I'm able to earn 30, 40, 50% in a year passively in, say, either Bitcoin or in some sort of stable coin, for example, if I'm able to earn that, then that's going to offset my values of my cryptocurrency. So if I have $10,000 invested and I can pull out, say, $3,000 or $2,000, then that's going to offset the market pulling back on my cryptocurrency. So I believe in earning passive income, or I look for cash flow coming out of the cryptocurrency market. Now that doesn't mean that I don't still buy and hold Bitcoin, buy and hold Ethereum, what I call Apex crypto assets. When you think about Apex crypto assets, think about like the top 10 type cryptocurrencies. I still believe in buying and holding, but passive income or cash flow from the cryptocurrency markets allow me to constantly buy without having to bring more dollars in. So if I can, as long as I can keep earning passive income, I can stack quote unquote cash for market dips, but at the same time, I can also take part of that and consistently buy other cryptocurrency assets, especially Apex cryptocurrency assets. Now, one of my strategies that I've been using is copy trading. This is where you basically can follow someone who has a 3 to 6 month track record. And a 6 month track record right now is incredibly, incredibly important because they went through a lot of volatility. So you can follow traders. Many are professional traders, and you can mimic exactly what they're doing in their account in our own account. So I have a goal. Last month I earned $554, and I have a goal to get this one passive income strategy up to $5,000 per month. You can go down in the description. You can subscribe, put in your name, put in your email list, click the submit button. You'll see the exact traders that I'm following. You'll see how I pick the traders that I'm going to follow. You're going to see what works. You're going to see what doesn't. It's all on display for you right there. Now, with that being said, ladies and gentlemen, I've got another video coming out where I'm going to be talking about a major airdrop that's going to be taking place tomorrow. You don't want to miss it, so make certain you go down in the description or you go down below this video, but make certain that you subscribe to the channel. Click that bell notification icon and click all. Ladies and gentlemen, if you believe in cryptocurrency and you believe in the future of this technology, make certain that you subscribe. Thank you for being here. Cryptocurrency equals freedom. This is Crypto Wealth. I'm out.